Global foreign direct investment flows are set to fall by 10 to 15% this year to a range of between $1.5 to $1.6 trillion. That's fresh evidence of just how vulnerable the global economy is. I'm joined now by James Zhan, Director of Investment and Enterprise at the United Nations Conference on Trade and Development, which has compiled this data, and James is based in Geneva, Switzerland. So James, just to unpack this a bit, this data is showing that businesses, companies are reluctant to invest cross-border. Is that what's going on here?
Yeah, that's right. Businesses are reluctant to invest for a number of reasons. First and foremost, of course, is because of the sluggishness of the economic growth and the fragility of the global economy, and of course, there's a lack of business opportunities due to the weak aggregate demands. That's one part. The second part is policies, the policy uncertainties, and you see that the election is coming up in a number of countries. There's also kind of escalation of geopolitical risks in that respect. And furthermore, we know that there's the commodity price issue. Therefore, the investment to the primary sector, the extractive industries, have been declining very much. And through our surveys, we can see that multinational companies,
right,
particularly the largest ones, are really pessimistic about the prospects of their investment.
Now, this 10 to 15% drop, can you give us some perspective as to sort of how bad this is? Maybe, how was it during the 2008 financial crisis, just so we can compare?
Yes, if you look at the global FDI flows or investment flows last year, it increased by 38%. For this, out of this 38%, we see a significant amount of the increase were basically due to the corporate reconfigurations or corporate restructuring, which did not add much to the productive capacity worldwide. That's what we call integrated international production networks that drives the global value chain and the trade. If we discount that, the global FDI increased only 15%. And overall, we see that the current level of global investment flows is still 10% or even more lower than the pre-crisis level or the pre-crisis peak in 2007. If you look at the profitability of the largest companies that
right,
we did a survey of 5,000, we see that last year the profit gains for the top 5,000 was at a similar level of the crisis period, that is 2008 and 2009.
Now, direct foreign investment is expected to rebound in 2017 and 2018, so that's the good news. What is different about these years? Is uncertainty expected to subside?
Yeah, we see that uncertainty will subside to a certain extent. We also see that the global economy is slowly gaining its momentum for growth, at least in certain areas, in certain regions. But we still see that this recovery is very modest. It's from a very low base because of the decline of this year. So it is kind of a modest recovery. We expect about 10% of increase in 2017 and a further modest increase in 2018. So it will hit around 1.7 trillion US dollars in 2017 and close to 1.8 trillion US dollars in 2018. But at that level, it's still lower than the pre-crisis peak, that is 2007.
All right, James, we have to leave it there. James Zhan from the United Nations Conference on Trade and Development. James, thank you for taking the time to join us.
Thank you, Scott, for having me here. Thank you.
I'm Scott Gamm, and you're watching The Street.